Hello, I'm Bill Oakley, President of Oakley Retirement Services, and this is part two of our video series on how to choose a financial advisor. Now, I'd like to talk a little bit about different types of advisors and the strategies that they use. Over the last probably 10 years or so, I've seen a trend where there are essentially two different mindsets or philosophies that advisors have. A lot of advisors will fall into one of these two categories. First of all, you've got the stock market oriented advisor who thinks everybody needs to be fully invested in the stock market. It's the only way to keep pace with inflation, and they really see the world in stocks, bonds, and cash, sort of the the business news channel language they're always speaking. And they also tend to say, don't ever touch an annuity, don't put anything in an annuity, just put it in the market. Annuities are terrible. So that's one type of advisor. The other type is the polar opposite, the person that thinks that is safety only, zero risk. You'd be crazy to put any money in the stock market. They usually have a very doom and gloom type message, and usually have some very good evidence of why the stock market will probably crash tomorrow. So these are very different opinions, and a lot of times advisors will sort of drift to either side there. What I've found in talking with a lot of people, and we specialize in working with baby boomers and people in retirement, is most people fall somewhere in the middle. They see the need for, they say, I like the idea of safety, principal protection, and earning a reasonable rate of return with safe money, but at the same time, we do see the stock market being part of our lives indefinitely, and we'd like some of our money to be invested in the markets with something we follow, and I think there are advantages to doing that. And usually they like the idea of both. So my suggestion is, when looking for a financial advisor, is to talk to somebody who's well-versed in both the safe money strategies and the markets, and more importantly, knows how to build portfolios but where the two work together, getting your safe money and your risk money where they complement each other. Some people will take will end up having one advisor that's their stock market person, their broker, and then they have a safe money person that's their insurance person and works with annuities. And what tends to happen is, over time, you'll see they'll both sort of be sort of trying to get more and more control of the assets, of the bigger portion of assets, and you have very limited communication between them, and you end up being stuck in the middle. My suggestion is, find an advisor who is able to do both well, and knows how to balance those two sides of investing. Again, this is Bill Oakley, President of Oakley Retirement Services. In part three, which we will do next, I'm going to talk about how advisors get paid. Fun topic. So stay tuned.